Question 1. Regulation of insurance in Arkansas. Which of the following is not one of the primary duties of an insurance producer in Arkansas? A. Recommending the most suitable insurance policies to clients based on their needs. B. Providing insurance company performance data to clients. C. Maintaining fiduciary responsibility when handling client funds. D. Disclosing all material facts to clients about the policies being sold. Answer: B. Providing insurance company performance data to clients. Explanation: in Arkansas, an insurance producer's duties include recommending the most suitable insurance policies, A. Maintaining fiduciary responsibility when handling client funds, C. And disclosing all material facts to clients, D. However, providing insurance company performance data is not a required duty. Insurance producers are expected to act in the best interest of clients, disclose essential information, and act with integrity, but they do not have to provide company performance data as part of their core responsibilities. Question 2. Health insurance. Mr. Thompson is considering enrolling in a health maintenance organization, HMO plan. He is concerned about needing specialized care that is outside the network of his HMO plan. What should Mr. Thompson know about receiving care outside of the network in an HMO plan? A. He will need to get a referral from a primary care physician to see a specialist within the network. B. He can see specialists directly without needing a referral, but will have to pay higher out-of-pocket costs for non-network care. C. HMO plans generally do not cover care outside the network except in emergencies, and prior authorization is required. D. He can use out-of-network care freely, but his premium rates will increase. Answer: HMO plans generally do not cover care outside the network except in emergencies, and prior authorization is required. Explanation: health maintenance organizations, HMOs, focus on providing care within their own network of healthcare providers. If Mr. Thompson requires specialized care outside the network, HMO plans typically do not cover it unless it's an emergency. For non-emergency care outside the network, prior authorization is usually required. This reflects the plan's structure, which aims to control healthcare costs by directing care through in-network providers. Option A is incorrect, as it refers to the typical requirement for seeing specialists within the network, not out-of-network care. Option B applies more PPO plans, no HMO plans. Option D is misleading, as out-of-network care generally incurs higher costs in PPO plans, no HMO plans. Question 3, scenario insurance policies. Mrs. Baker has purchased a homeowner's insurance policy with a $500 deductible. A fire damages her kitchen, resulting in a total loss of $12,000. What will her insurance company pay, assuming no other exclusions apply? A. The insurer will pay $12,000 minus the deductible, which is $500, for a total of $11,500. B. The insurer will pay $500, the amount of the deductible. C. The insurer will pay the full $12,000, as the deductible does not apply to fire damage. D. The insurer will pay $12,000 minus 10% of the loss, which is $1,200, for a total of $10,800. Answer: A. The insurer will pay $12,000 minus the deductible, which is $500, for a total of $11,500. Explanation: in a standard homeowner's insurance policy, the deductible is the amount that the policyholder must pay out of pocket before the insurer covers the remaining amount of the loss. In this case, the damage to Mrs. Baker's kitchen is $12,000 and the deductible is $500. The insurer will subtract the deductible from the total damage amount and pay the difference, which is $11,500. Option B is incorrect, as the deductible is subtracted from the total loss not paid out by the insurer. Option C is incorrect because the deductible is always applied unless specifically stated otherwise in the policy. Option D is incorrect, as there is no standard rule in homeowners insurance to subtract 10% of the loss unless separate provision specifies such limit. Question 4. Property and casualty insurance. Which of the following is true about personal liability coverage under a homeowner's insurance policy? A. It provides coverage for damages caused by the policyholder's intentional acts. B. It provides coverage for medical bills of guests injured on the policyholder's property. C. It covers property damage caused by the policyholder's vehicle regardless of the circumstances. D. It provides coverage for bodily injury caused by the policyholder's actions outside the home within limits. Answer: D. It provides coverage for bodily injury caused by the policyholder's actions outside the home within limits. Explanation: Personal liability coverage in homeowners insurance policy typically provides protection against bodily injury and property damage claims made by others due to the policyholder's negligence, both within and outside of the home. Option A is incorrect, as personal liability does not cover intentional acts. Option B is incorrect because medical payments coverage, not liability coverage, handles medical bills for guests injured on the property. Option C is incorrect, as auto-related liability is usually covered by the vehicle's auto insurance, not homeowners insurance. Question 5. Life insurance. Which of the following is the primary feature of a whole life insurance policy? A. Premiums and coverage amounts increase with the policyholder's age. B. It provides temporary coverage, typically for specified term. C. It offers both death benefit and cash value component. D. It requires annual renewal and typically has decreasing death benefit. Answer: C. It offers both a death benefit and a cash value component. Explanation: whole life insurance is a type of permanent life insurance that provides both a death benefit and a cash value component. The policyholder's premiums contribute to both aspects, with the cash value growing over time and available to the policyholder through loans or withdrawals. Option A is incorrect, as premiums for whole life insurance are generally fixed, not increasing with age. Option B describes term life insurance, not whole life. Option D describes the features of term life and not whole life, which does not require annual renewal and maintains fixed death benefit. Question 6. Health insurance. Which of the following is a key feature of a preferred provider organization (PPO) health plan? A. Members are required to receive care only from in-network providers. B. Members can see specialists without needing a referral. C. Members pay a fixed monthly fee for all services regardless of usage. D. Preventive care is only covered if the patient has a referral from their primary care doctor. Correct answer: B. Members can see specialists without needing a referral. Explanation: PPO plans provide members with greater flexibility in choosing healthcare providers, allowing them to see specialists without requiring a referral. This flexibility is one of the main advantages of PPO plans compared to HMO plans, which require referrals. Option A is incorrect, as PPO members can see both in-network and out-of-network providers, though out-of-network care is typically more expensive. Option C is incorrect, as PPO plans do not use a flat fee for all services, but instead require copayments or coinsurance depending on the service. Option D is incorrect, as PPO plans do not require a referral for preventive care. Question 7. Insurance producer responsibilities. Which of the following best describes an insurance producer's fiduciary responsibility? A. The producer must always act in the best interest of the insurer. B. The producer must disclose all commissions and compensation from insurers to clients. C. The producer is required to act in the best interest of their clients, even if it conflicts with the insurer's interest. D. The producer must ensure that clients purchase the maximum coverage available regardless of need. Answer: C. The producer is required to act in the best interest of their clients, even if it conflicts with the insurer's interest. Explanation: an insurance producer has fiduciary duty to act in the best interest of the client. This includes recommending policies that meet the client's needs, even if it means foregoing higher commissions or sales incentives from insurers. Option A is incorrect, as the producer must prioritize the client's interests over those of the insurer. Option B is partially correct, but does not fully define fiduciary responsibility, which encompasses the duty to act in the client's best interest. Option D is incorrect, as the producer must recommend appropriate coverage based on the client's needs, not necessarily the maximum available. Question 8. Ethics and professionalism. Which of the following is an unethical practice for an insurance producer in Arkansas? A. Giving a discount on premiums in exchange for referring clients to another service provider. B. Offering a free consultation to discuss the most suitable policies for a potential client. C. Providing clients with accurate information regarding policy coverage and exclusions. D. Disclosing to a client the available options for claim settlement and helping them file a claim. Answer 8. Giving a discount on premiums in exchange for referring clients to another service provider. Explanation: offering discounts or other incentives in exchange for referrals, known as rebating, is considered an unfair trade practice and is prohibited under Arkansas insurance law. Insurance producers must avoid offering incentives that could compromise their professional integrity and fairness. Option B is ethical, as offering a consultation to discuss policy options is within the producer's responsibilities. Option C is ethical, as providing accurate and complete information is key duty of an insurance producer. Option D is also ethical and reflects the producer's role in assisting clients through the claims process. Question 9. Annuities. Which of the following is true regarding the taxation of annuity benefits? A. The entire amount withdrawn from an annuity is tax-free. B. Annuity income is taxed as ordinary income based on the account holder's tax bracket. C. Annuity benefits are taxed only if the beneficiary is the annuity holder's spouse. D. The principal portion of an annuity payout is subject to taxation, but the earnings are tax-free. Answer. B. Annuity income is taxed as ordinary income based on the account holder's tax bracket. Explanation. When annuity benefits are paid out, the portion of the payout representing earnings, interest, dividends, etc., is taxed as ordinary income at the policyholder's tax rate. The principal, the amount originally invested, is not taxed again. Option A is incorrect, as withdrawals are subject to tax on the earnings portion. Option C is incorrect, as the taxation of annuity benefits does not depend on the beneficiary's relationship to the annuitant. Option D is incorrect because the earnings portion of the annuity payout is taxable, not tax-free. Question 10. Regulation of insurance in Arkansas. Which of the following actions would most likely violate Arkansas insurance regulations? A. A producer providing insurance advice only after obtaining a signed document from the client. B. A producer accepting commissions from the insurer only after the policy has been issued and in force. C. A producer recommending an insurance policy that is more expensive than necessary for the client's needs. D. A producer offering an informational seminar about insurance coverage options to a group of potential clients. Answer. C. A producer recommending an insurance policy that is more expensive than necessary for the client's needs. Explanation. Recommending a policy that is not suited to the client's needs, particularly one that is unnecessarily expensive, constitutes unethical behavior and a violation of the producer's fiduciary responsibility. Insurance producers must act in the best interest of the client and recommend policies that meet the client's needs, not their own interests. Option A is permissible, as obtaining signed document is not inherently unethical. Option B is acceptable under Arkansas insurance law, as commissions may be paid after policy is issued and in force. Option D is lawful action and does not violate any regulations. Question 11. Claims handling. Which of the following best describes the principle of indemnity in property insurance? A. The insured is entitled to recover the full value of their property even if it exceeds the amount of coverage. B. The insured is entitled to compensation for their actual loss, but not more than the amount of the policy limit. C. The insured can recover both actual damages and punitive damages in the event of a claim. D. The insurer is required to cover damages caused by natural disasters, regardless of the policy terms. Answer. B. The insured is entitled to compensation for their actual loss, but not more than the amount of the policy limit. Explanation. The principle of indemnity in insurance ensures that the insured can recover only the actual financial loss suffered up to the policy limits and is not allowed to profit from the loss. Option A is incorrect because the indemnity principle prevents recovery above the policy limit. Option C is incorrect, as property insurance does not cover punitive damages. Option D is incorrect because coverage for natural disasters depends on the policy terms and may require separate coverage, e.g. flood or earthquake insurance. Question 12. Automobile insurance. Which of the following best describes the coverage provided by liability insurance in an auto policy? A. Coverage for injuries to the policyholder and their passengers. B. Coverage for property damage caused by the insured's vehicle regardless of fault. C. Coverage for bodily injury or property damage to others for which the policyholder is at fault. D. Coverage for the repair of the insured's own vehicle after collision regardless of fault. Answer. C. Coverage for bodily injury or property damage to others for which the policyholder is at fault. Explanation. Liability insurance in an auto policy covers bodily injury and property damage caused by the policyholder to others in the event of an accident where the policyholder is at fault. Option A refers to personal injury protection (PIP), not liability insurance. Option B refers to property damage liability but does not specify the condition of fault. Option D refers to collision coverage, which covers damages to the insured's vehicle. Question 13. Business insurance. Which of the following is typically covered by a commercial general liability (CGL) insurance policy? A. Property damage to the insured's own building. B. Loss of income due to business interruption. C. Bodily injury to third party while on the insured's premises. D. Employee's injuries while performing job-related tasks. Answer C. Bodily injury to a third party while on the insured's premises. Explanation: commercial general liability (CGL) policy typically covers bodily injury or property damage to third parties that occurs on the insured's premises or as a result of the insured's operations. Option A refers to property insurance, not CGL. Option B is typically covered by business interruption insurance, not CGL. Option D would be covered by workers' compensation, not CGL. Question 14. Insurance contracts. Which of the following is required for an insurance contract to be legally binding? A. The contract must be in writing and signed by both parties. B. There must be an offer and acceptance between the insured and insurer. C. The contract must be executed by a licensed attorney. D. The contract must specify the total amount of coverage, regardless of the insurance type. Answer B. There must be an offer and acceptance between the insured and insurer. Explanation: for an insurance contract to be legally binding, there must be an offer from one party and acceptance by the other, which creates a mutual agreement. Option A is not required for all contracts, as some may be verbal or implied. Option C is not a requirement for an insurance contract. Option D is incorrect, as coverage limits vary by policy and type of insurance. Question 15. Health insurance. Which of the following is a characteristic of a health maintenance organization? HMO. Patients have greater flexibility to choose out-of-network healthcare providers. B. Primary care physicians act as gatekeepers for referrals to specialists. C. There is no requirement for referrals for specialty care. D. HMO plans usually have higher premiums than PPO plans. Answer B. Primary care physicians act as gatekeepers for referrals to specialists. Explanation: in an HMO, a primary care physician PCPS typically act as gatekeepers, meaning that patients must get a referral from their PCP before seeing a specialist. Option A is incorrect. HMO plans generally restrict care to in-network providers, with little flexibility for out-of-network care. Option C is incorrect, as HMOs require referrals for specialty care. Option D is incorrect. HMO plans tend to have lower premiums compared to PPO plans. Question 16. Life insurance. Which of the following would most likely trigger the payment of the death benefit in a life insurance policy? A. The policyholder commits suicide within 2 years of the policy issue date. B. The policyholder fails to pay premiums for 2 consecutive months. C. The policyholder dies as a result of an accident while engaging in a dangerous hobby. D. The policyholder lives beyond the age specified in a term life insurance policy. Answer C. The policyholder dies as a result of an accident while engaging in a dangerous hobby. Explanation: in most life insurance policies, death due to an accident is typically covered even if the policyholder was engaged in a dangerous hobby, unless specifically excluded by the policy. Option A refers to a suicide clause where death by suicide within 2 years often leads to limited or no benefit payout. Option B refers to non-payment of premiums, which can lead to policy cancellation. Option D is incorrect, because term life insurance only pays out if the insured dies within the term, not after. Question 17. Underwriting. Which of the following factors is most important for an underwriter to assess when determining the premium for a life insurance policy? A. The applicant's credit score and financial history. B. The applicant's health status and medical history. C. The applicant's employment history and work-related risks. D. The applicant's marital status and number of dependents. Answer B. The applicant's health status and medical history. Explanation: underwriters consider the applicant's health and medical history as the primary factors in determining premiums for life insurance, as these impact the risk the insurer is taking on. Option A is important for other types of insurance, but not as much for life insurance premiums. Option C is relevant for certain types of insurance, e.g. disability insurance, but not for life insurance premiums. Option D is considered for underwriting purposes, but is less significant than health status. Question 18. Auto insurance. What is typically covered under comprehensive coverage in an auto insurance policy? A. Damage to the insured vehicle from a collision with another vehicle. B. Injury to the insured's passengers in the event of an accident. C. Damage to the insured vehicle caused by non-collision events, such as theft or vandalism. D. Medical expenses for the insured and their passengers in the event of an accident. Answer C. Damage to the insured vehicle caused by non-collision events, such as theft or vandalism. Explanation. Comprehensive coverage typically covers damage to the insured vehicle caused by events that are not related to a collision, such as theft, vandalism, fire, or natural disasters. Option A refers to collision coverage. Option B refers to personal injury protection (PIP) or medical payments coverage. Option D also refers to PIP or medical payments coverage. Question 19. Insurance fraud. Which of the following is considered insurance fraud? A. A policyholder overstating the value of their property when filing a claim. B. A policyholder notifying their insurer about a minor accident. C. A policyholder failing to pay their premiums on time. D. An insurance agent suggesting a policy to a client that is not suitable for their needs. Answer A. A policyholder overstating the value of their property when filing a claim. Explanation. Insurance fraud occurs when a policyholder intentionally provides false information, such as inflating the value of their property to receive a higher payout. Option B is not fraud but a routine part of the claims process. Option C refers to policy non-payment, not fraud. Option D is unethical but not necessarily fraud unless deliberate misrepresentation is involved. Question 20. State regulations under Arkansas law and insurance. Producer must complete how many hours of continuing education every 2 years? A. 10 hours. B. 16 hours. C. 24 hours. D. 30 hours. Answer B. 16 hours. Explanation. In Arkansas, insurance producers must complete 16 hours of continuing education every 2 years to maintain their license. Option A is incorrect as it does not meet the state's requirement. Option C and D are incorrect because the state mandates 16 hours, not more. Question 21. Claims handling. Which of the following is an example of a duty to defend in liability insurance? A. The insurer must cover all defense costs even if the policyholder is found not liable. B. The insurer has no obligation to provide defense if the claim is deemed frivolous. C. The insurer can withdraw from defending the case at any time. D. The insurer will only cover the defense costs up to the policy limits. Answer A. The insurer must cover all defense costs even if the policyholder is found not liable. Explanation. The duty to defend requires the insurer to defend the insured in a lawsuit even if the claims are unfounded or not covered by the policy. Option B is incorrect because the insurer's duty to defend is usually broad and applies even if the claim seems frivolous. Option C is incorrect because the insurer is obligated to provide defense for as long as the claim may fall within policy coverage. Option D is incorrect as the insurer must cover defense costs regardless of policy limits as part of their duty. Question 22. Underwriting. Which of the following is the most important factor when underwriting a homeowner's insurance policy? A. The applicant's age. B. The applicant's credit score. C. The age and condition of the home. D. The applicant's occupation. Answer C. The age and condition of the home. Explanation. When underwriting homeowners insurance, insurers focus on the age, condition, and overall risk factors related to the home itself. Well-maintained, newer home is less risky than an older one. Option A is less relevant in underwriting homeowners policies. Option B is relevant but secondary to property-specific risk factors. Option D is not typically a significant factor in homeowner insurance underwriting. Question 23. Liability insurance. Which of the following does general liability insurance typically cover? A. Injuries sustained by the insured during work. B. Medical expenses for the insured's employees. C. Bodily injury or property damage to third parties. D. Damages to the insured's own property. Answer C. Bodily injury or property damage to third parties. Explanation. General liability insurance covers bodily injury or property damage caused to third parties by the insured's actions, products, or services. Option A refers to workers' compensation insurance. Option B refers to workers' compensation or health insurance. Option D refers to property or casualty insurance, not liability. Question 24. Insurance fraud. Which of the following actions would likely constitute insurance fraud? A. An insured submitting a claim for damage they know is pre-existing. B. An insured submitting a claim for damage caused by a covered event. C. An insured filing a claim for damages caused by a natural disaster. D. An insured failing to notify the insurer about a minor claim. Answer A. An insured submitting a claim for damage they know is pre-existing. Explanation. Insurance fraud occurs when an insured intentionally provides false or misleading information, such as submitting a claim for pre-existing damage. Option B, C, and D are not fraudulent actions if the claim is truthful and within the scope of the policy. Question 25. Policy provisions. What does the coinsurance clause in a property insurance policy generally require? A. The insured must carry insurance equal to a certain percentage of the property's value to avoid penalties. B. The insured must pay the full cost of repairs if they don't maintain adequate coverage. C. The insurer will cover all repair costs regardless of the insured amount. D. The insured will receive cash payment equal to the property's value at the time of the loss. Answer A. The insured must carry insurance equal to a certain percentage of the property's value to avoid penalties. Explanation. The coinsurance clause requires the insured to maintain coverage at certain percentage of the property's value, e.g. 80%, to avoid penalty in case of claim. Option B is partially correct but does not describe the usual coinsurance rule. Option C is incorrect because coinsurance generally reduces the payout if the insured doesn't maintain the required coverage. Option D is incorrect because coinsurance does not work like that. Question 26. Motor vehicle insurance. Which type of auto insurance covers damage to the insured vehicle in the event of a collision with another vehicle? A. Comprehensive insurance. B. Collision insurance. C. Liability insurance. D. Personal injury protection. Answer B. Collision insurance. Explanation. Collision insurance covers damage to the insured's vehicle caused by collision with another vehicle or object, regardless of fault. Option A refers to comprehensive insurance, which covers non-collision damage, e.g. theft, vandalism. Option C is liability insurance, which covers the insured's legal responsibility for others' injuries or damages. Option D is personal injury protection, which covers medical expenses for the insured and passengers. Question 27. Workers' compensation insurance. Which of the following is typically covered under a workers' compensation policy? A. Employee's injury sustained while commuting to work. B. Employee's injury while on personal vacation. C. Employee's injury sustained while working, regardless of fault. D. Employee's injury resulting from misconduct or illegal activity. Answer C. Employee's injury sustained while working, regardless of fault. Explanation. Workers' compensation provides benefits to employees who are injured during the course of employment, regardless of who is at fault. Option A is incorrect because injuries sustained during commuting are generally not covered. Option B is incorrect as injuries occurring during personal activities are outside of coverage. Option D is incorrect as workers' compensation typically does not cover injuries resulting from misconduct or illegal activities. Question 28. Homeowners insurance. Which of the following would not typically be covered by a standard homeowners insurance policy? A. Fire damage to the home. B. Theft of personal property. C. Flood damage to the home. D. Vandalism of the property. Answer C. Flood damage to the home. Explanation. Flood damage is generally not covered by standard homeowners insurance policies. Separate flood insurance is required. Options A, B, and D are typically covered under a standard homeowners policy depending on the terms. Question 29. Exclusions in insurance. Which of the following is usually an exclusion in a standard homeowners insurance policy? A. Accidental damage to the home. B. Damage caused by vandalism. C. Damage caused by an earthquake. D. Damage caused by fire. Answer C. Damage caused by an earthquake. Explanation. Most standard homeowners insurance policies exclude earthquake damage, and separate earthquake insurance is typically needed for coverage. Options A, B, and D are typically covered under standard homeowners insurance policies depending on the circumstances. Question 30. Insurance policies. Which of the following is the primary function of the deductible in an insurance policy? A. To increase the policyholder's premium. B. To lower the insurer's costs in the event of claim. C. To set limit on the total amount an insurer will pay. D. To reduce the amount of the claim the insured is required to pay. Answer B. To lower the insurer's costs in the event of claim. Explanation. Deductible is the amount the insured must pay out of pocket before the insurer starts covering the remaining costs. It helps lower the insurer's costs for small claims. Option A is incorrect as higher deductible typically lowers the premium. Option C is incorrect as the deductible doesn't set limit on the total payout. It only impacts the insured share of the costs. Option D is incorrect, as the deductible represents the amount the insured must pay before the insurer pays.